There we go. Hey everyone, hope you're all doing well. Hope you're all having brilliant, fantastic, amazing days. As always, welcome back to another video. Today I'm going to be breaking down 12 mistakes that I made as a novice beginner trader when trading Forex, gold, indices, commodities, and 12 bullet points that I would give to myself and tell myself when I first started back when I was 17. Because I think it's very, very easy to look back on and reflect on things and tell yourself what you could have done better. But hopefully this video can be useful to many of you out there that are, perhaps starting your trading journey, that are perhaps within your first 6 months to a year of trading. And all of these points are going to be relevant to you. So stick to the end. And as always, I've got my notepad up here on the right-hand side, with all of the bullet points and all of the important relevant information. So, hopefully this can be short, concise, and sweet for you all. So let's begin. So point number one that I've written down is strategy hopping. Okay, now if you don't know what I mean by strategy hopping, let me paint the picture. When you first start trading, trading is very, very exciting. At least it was for me. The concept of being able to make money from your phone or your laptop, make pretty much an unlimited amount of money, with a certain degree of capital size limitation. Trading is exciting, okay, and of course it's some form of gambling as well. So it's addictive, and you've got to suppress that emotion, and that's another video for another day. But ultimately, what I'm alluding to is trading is exciting, and as a trader, when you first start out, you have an inherent nature to be trading and over trading and doing a lot of it. Okay. And if you see something that doesn't work, you have another nature just to move to another strategy. Okay. Now, of course, there's numerous different approaches to the market: swing trading, scalping, day trading, intraday trading. And if something doesn't work for you, you might test it for a day, 2 days, and you just move on. Okay, you jump to another strategy, you test out some other confluences and some other things, perhaps some other indicators, perhaps some other expert advisors, perhaps some other settings. The list goes on. But what I'm trying to say is strategy hopping. Okay, and you start out with something and you don't really test it enough. Okay, you don't test it enough, perhaps on a demo account, you perhaps jump onto a live account too soon. And if it doesn't work within a day, of course, the nature of the market is that it moves in cycles, okay, and some things will work for certain months, certain weeks, certain days, and some things won't. And that's why you're always going to be constantly adapting your strategy. But at least for me, the first thing that I made a mistake on was, strategy hopping. That I would try something out for, a week or less. And, if it wasn't working, I would move on to something else. And that was a big, big mistake, because you're never going to get a perfect strategy that works every single day of the week, every single hour of the day, relentlessly, because otherwise everyone would be billionaires, and millionaires. So it doesn't exist. The perfect strategy does not exist. It's always going to have to be tweaked. Things are going to have to be changed every single day, every single week, every single month. And, the faster you learn that, and the faster you learn, just focus on one thing, test it for 6 months, really see if it works, because time is on your side when you first start out trading. You don't need to make money instantly. This can be started off as a side hustle. It doesn't have to be a full-time job. And so ultimately you've got time, and everyone stresses about finding that perfect strategy hopping and jumping between strategies too quickly. Okay, so that's the first point. Second point is using too big an account size in a demo environment. Okay, so what I've recommended in other videos is that when you start out trading, you test out a demo account. Okay, you learn all of the tools, you learn all of the terminology on a demo account. Okay, it's a risk-free environment, it's demo money, it's not real money. Okay, and you can choose what account size you want. With these brokerages, you can choose up to, I've seen some which has got like 5 million, $5 million. So you can, really disguise the limit in terms of how much you want to trade on a demo account. Now, I know when I first started out, one of the mistakes that I made was just doing too high and ambitious an account size. I think I started off with like $50,000. And of course, I didn't have $50,000 as a 17-year-old. So I was making insane profit, getting all excited about all of this, just to understand that I didn't have that level of money that I could deposit into an account. And also, a demo account environment is very, very different. Okay, you've got no emotion attached because it's not your money on the line, okay, with every single trade that you take. So I think one of the mistakes that I made was just choosing too big an account size, not making it realistic for myself. I would say, start with what you can afford. If you can afford $100, make an $100 account size. Okay, so you can really see how a strategy would work, how your psychology would work, as close to what you can actually afford as possible. Okay, so that's the second point. Third point is not focusing on my psychology. Okay, and I didn't realize this until a year in, really, that your actual psychology, how you manage trades and your emotion behind trades, is actually what keeps a lot of really successful, highly skilled traders from being actually profitable. There's a lot of people that have amazing chart outs, amazing analysis, but their emotions suck, and so they can't really manage trades, hold trades, close trades, know when to to cut your losses and know when to keep on to your winners, and they can't manage that within their own self and their emotions. That they end up becoming a losing trader. So what I didn't realize is you need to put a lot of emphasis on your psychology. Okay, trading. I read a quote, I think, on my Instagram a couple of months ago, which was that, well, let me try and think exactly what it was, but it was something like, bad trading is exciting, okay, and boring trading is profitable, something along those lines. Basically saying that, if you want to be a risk-taking gambler, okay, and you want to take loads of trades and you want to be aggressive in the market, you're not going to be very profitable. Whereas boring trading is, what is actually profitable, and actually what makes the money. And I think it links back to your psychology that, a lot of people like the adrenaline and like the buzz of high lot sizing, like scalping trades. And that might not be suited to you. It certainly really isn't suited to me. I'm more of an intraday trader. So I think what I say is focus on your psychology, focus on what actually you can cope with yourself. Then focus on improving your psychology by reading books, by perhaps doing meditation, but perhaps, doing other different things into your daily routine. Perhaps not over risking, perhaps reducing the lot sizing so that it's more manageable on your own emotions, to ultimately improve your psychology. Because there's a lot of really good strategies out there, but there's very few people that have got clearly great psychology, because otherwise it wouldn't be 90% of traders are losing money on brokerages. So that's point number 3. Point number 4 is using patterns. Okay, now this will be another long video, if I allow it to be, and I don't want it to be too long. I want to try and keep it into 10-15 minutes. So using patterns, I will delve into it on another video, I'm sure, but too many retail traders focus on patterns: W's, M's, head and shoulders, reverse head and shoulders, all of these different patterns that seem amazing, that seem like secret hacks and tricks within the market. But very, very rarely do they actually play out. Okay, you've got to think that the market is run by much larger institutions than us retail traders. And if we're trading head and shoulder patterns, okay, which is what 95% of other traders are trading, and 90% of traders are losing money, then clearly there's something wrong with patterns and they don't always work. But what I would basically say is just steer clear of blindly following patterns, basically. Okay, and again, that links onto point 5. Don't blindly use indicators, okay? Use some common sense within the market as well. Indicators don't always work. If there was just one winning indicator, then everyone would be using it. And again, everyone would be millionaires and billionaires. So using indicators, using patterns, and blindly following them both is not a good idea. Okay, 6 is not focusing on what trading style suits you. Okay, personally for me, as I've said, I'm not an aggressive high lot size scalper. I'm more an intraday trader. But at the same time, I've got enough time within my day that I don't need to be a swing trader. I'm not running a 9-to-5 or a family, as of the moment. So, swing trading, I can afford to take more trades than a swing trader can. And not focusing my trading style, I didn't realize how many different styles of trading there was. And focusing on what you can. It links with your psychology as well. Focusing what you can cope with within your own psychology, and at the same time, then focusing on what trading style will suit you is smart. And also figuring out how much time you have in the day to dedicate towards trading. Okay, number 7 is not developing my own strategy soon enough. Okay, now what I realized, of course, is linking onto your psychology, linking onto your trading style. Developing your own strategy is a wise idea. Okay, because it can be tailored and suited directly towards those both. So, when I did develop my own strategy and I didn't rely on other people's strategies, because it was my own strategy, and then I was tweaking it every single day and making it as good as I could, I actually became a lot more profitable. Okay, because I used things that I'd liked from other people's strategies that I'd seen. I developed a little bit on my own from trial and error basis, and developing my own strategy was the smartest thing that I did, really, because it increased my profitability massively. Okay, the number 8 is aspiring to gurus, comparing yourself to others. Okay, this is something I did when I first started out. Everyone does it. You watch lifestyle videos, you watch people in exotic, nice, fast cars that are already winning, they're already doing really, really well, and you're comparing yourself to them. Okay, now it can go one or two ways. It can either be really demoralizing, okay, and you can be like, oh my goodness, I'm still stuck with such a small amount of capital, making such a small amount of profit, or it can be aspirational, okay, and you can be like, that is the goal one day. It's going to be exciting when I get there. I'm looking forward to it. For me, it was, I'm really excited to see where I'm going to end up in 5-10 years time, and see where I'm going to be at, and hopefully at that level and beyond. Some of the Forex lifestyle people that I've seen. But what I would say is, a lot of people get wrapped up in it thinking, oh my goodness, amazing gurus spend all their time watching these gurus rather than actually just developing and focusing on themselves. You're not going to be making the same level of profit within a day because you probably don't have the same amount of capital. And so don't compare yourself to them. Don't feel disheartened, don't feel demoralized, because sometimes you can. So that's number 8. Number 9 is holding on to losses for too long. Okay, holding on to losses is, one of the worst things you can probably do as a trader. Okay, hoping that the market is going to retrace, it's going to retract, and it's going to come into your favor. Very, very rarely does it do that. And, unfortunately, the 1 or 2 times that it does do that gives you hope in the future and builds up bad trading style and habit that it's going to happen in the future. So holding on to your losses is a bad idea. Extending your stop losses, widening everything out, not really sticking and trusting your own analysis, going against your analysis, opening up those stop losses, holding on to those losses, because that's how you blow accounts, and that's how bad things happen. So number 10 is not trusting your analysis enough. Links onto point 9. Trust your analysis. When you say, when it gets to this level, I'm going to take partials, I'm going to move stop loss to break even. When it hits this level, I'm going to close out the trade. When it hits this level, I'm going to take full profit. Trust it, okay? And often, setting and forgetting your strategy and your analysis is one of the best things to do. Place the trade, set the stop loss, set the take profit, and leave it. Forget it. Come back to it in a couple hours time and see how it's performed. So yeah, number 10 is trusting your own analysis enough. I didn't trust my analysis enough. I was, closing out trades too early, when I first started out, and it's something that takes time and takes, a bit of time to get used to, but trusting your analysis is one of the best things you can do. Okay, 11 is not finding a mentor. I was really going blindly into this trading world and learning everything as I went. I'm spending a lot of time just watching clearly YouTube videos, a lot of time, going on trial and error basis, but finding a mentor. And, I don't have a mentor as such, but I have lots of people that I'm in contact with every single day, and learning from others is one of the most important, crucial things. Okay, getting into group chats, speaking to people with experience, not people that just show off their results, but people that actually care, about a community, people that actually want to see people succeed, learning from them, not bugging them and being a pain and being, pestering them, but just understanding why they place certain trades, understanding why they did analysis, what, trading styles do they work with, what trading habits do they do. Learning off of others is constantly going to help you, become a better trader. And it's definitely one of the best things that's helped me out in the last couple of years is speaking to other people that have, got 20, 30, 40 years experience trading. They've got way more experience than I do. And I personally have learned a lot from them. So 11 is, speaking to people, not finding a mentor. You don't have to find a mentor, but just ultimately speaking to people on a daily basis, learning from them is going to help. Number 12 is not being part of a really, really good community early enough. The first 6 months, I wasn't really part of any communities. I was just trading solo. And it's linking on to point 11 is learning from others is often the best way to do it. Being part of a good community with beginners, intermediate, and expert traders is one of the smartest things to do, because you can learn from everyone. Beginners are often asking questions that you would ask. Okay, expert traders, they, a lot of really, really good traders actually want to help just for free, because it's quite rewarding when you help people. And certainly what I found as well is making these YouTube videos, making these posts, recording these videos, posting out trades and helping people make money and be successful is one of the most rewarding things that I've done. So yeah, being part of a good community, okay, learning from others is crucial. Okay, so those are the 12 points. Hopefully, they've helped shed some light on mistakes that I made when I first started out trading. Hopefully, you've learned a little bit from it. If you have, feel free to comment, feel free to like the video, feel free to subscribe, watch the other YouTube videos as well. And as always, I'm going to mention it again. All the links are down below to my Discord, my Telegram, my Instagram, all of the different group chats like Facebook and TikTok as well. And yeah. If you want to join a loving community where there is beginner, intermediate, and expert traders where you can learn lots from, feel free to join. It's free. And, ultimately, I look forward to seeing you inside. So have a brilliant rest of your day. We'll see you in the next video, and bye for now.